We just want to thank everyone for listening to our podcast this year. It's been an interesting year from an economic, from a market perspective, and we hope that we shed some light on some of those really interesting details that you get from not only a headline perspective, but also, what everybody's talking about when it comes to the economy. And we wanted to leave you guys with our 12 days of Christmas. And what is that? Our 12 days of Christmas is that wish list we have for 2026. And let's be realistic. Some of these are not going to happen, but we do want to give that fun kind of wish list that you guys can take, maybe just some Christmas dinner tables, and you can discuss this. But we'll start with the first day of Christmas. We would love one cohesive government, meaning that Democrats and Republicans get along. For the second day, we would love for that Japanese 10-year bond to stay below 2%. If you start to see a big increase in international bond yields, that does have ramifications globally, and we do see correlations. For the third day of Christmas, now this is not likely at all, but wouldn't it be nice to get 3 interest rate cuts from the Federal Reserve? We think maybe 1, if that, but unfortunately, we don't think the Fed's going to come into the rescue and give us 3 rate cuts. The fourth day of Christmas, it would be wonderful to see 4 straight years of double-digit gains for the S&P 500. We're on 3 straight years. If we go next year for a 4th, that would be fantastic. 5, who wouldn't want 5 golden rings, especially at $4,200 an ounce? The 6th day of Christmas, the housing market has been in a lot of distress. So we would love to see a mortgage rate below 6%. That would help from the affordability perspective and maybe get some more lifeline into the housing market. The 7th day of Christmas, we are hopeful that consumer confidence can rise 7% for next year. We've had a lot of very detrimental numbers from a consumer confidence perspective. It hasn't necessarily translated into spending, but consumers are feeling very strained. We would love to see a 7% increase in consumer confidence for next year. On the 8th day of Christmas, we would love for no higher than an 8% increase in the Treasury debt. We tend to get on average about an 8% increase in Treasury debt. Let's hope we don't get any more, even with the additional One Big Beautiful Bill. We would love to keep that around 8%. That would be consistent with history. On the 9th day, we would love to see that the office commercial mortgage-backed security delinquency rate stays at around 9%. Right now, it's at 10%, and that's the highest level we've seen since the Great Financial Crisis. So we'd love to see that notch down a little bit. That would help a lot from a real estate perspective. On the 10th day of Christmas, wouldn't it be nice to get 10% or more of earnings growth for the S&P 500? Double-digit earnings growth consistently for multiple years is not that common. We'd love to get more of a double-digit increase next year. That will be the first time that we've seen that since the 2003 to 2006 time period. On the 11th day of Christmas, we would love for the government to settle into around an 11% tariff rate. It historically has been 2 to 3%. It's around 14% now. If we get more deals going on in the White House, we'd love to see that around 11%. That would not only bring in revenue for the government, but also help offset some of the One Big Beautiful Bill tax breaks for consumers. On the 12th day of Christmas, as we say, we would love for the MSCI All Country World, excluding the U.S., to rise above that 12% or more. That will be above the historical average, and it would show you that there's diversification, that it does matter, and we are seeing some rotation into the international markets. Now, we hope you have a wonderful holiday. This was just some fun around that 12 days of Christmas. Some things we're wishful for. We know they all won't come to fruition, but hey, it's fun to look at things and have some hope around this holiday season. Thank you so much. And if you want a history of our podcast, go to marketswithmegan.fm.